brewing today. AI-driven corporate transport as a service company Routematic, which offers a full-stack commute solution to over 300 corporates across 23 Indian cities, has raised $40 million in a Series C funding round led by Fullerton Carbon Action Fund and Shift for Good. Founded in 2013, Routematic has delivered over 5 million trips a month for more than 300,000 employees, powered by its proprietary AI technology. Joining me now to talk about how Routematic is redefining corporate transportation is its founder and CEO, Sriram Kannan. Sriram, welcome to Startup Street. As I mentioned earlier, this $40 million funding comes from Fullerton Carbon Action Fund and Shift for Good, both major players in sustainable investment. Tell us, how will this support accelerate your sustainability goals, especially the integration of electric vehicles into your fleet?
Yeah, so sustainability comes from two different angles. One is pooling of...
Sriram, I believe you're on mute. Can you unmute yourself?
I am on mute. I am not on mute. Yeah, I seem to be okay now.
Yes.
Can you hear me now?
Yes, go ahead. Go ahead.
Yeah, so sustainability, we need to work on it along two different angles. One is the pooling of cars, even before the EVs come in. How do you reduce the number of trips? How do you reduce the dry runs and so on in the logistical space? And in addition to that, you also, bring in EVs to lift off some of the or most of the ICE vehicle runs. So it comes from both angles. So this kind of a sustainability focused funds backing us, two of the giants in the industry, will definitely help us to scale the technology that we have been improving over the last 12 years. And we call it the moving from the lab to the factory kind of a scenario now, where we are looking to scale it much bigger than where we are right now.
All right, so take us through your fund allocation plans. Beyond converting 30% of your fleet to EVs, what other initiatives, Sriram, are in the pipeline? And how will this fresh capital help Routematic differentiate itself from traditional players in the transport space?
So the traditional urban mobility play is either demand focused or supply focused or some sort of a glue logic. Our ambitious plan is to actually handle both the demand and supply on equal rank, and with the unit economics that help the driver to maximize their earnings, right, by packing as much as possible. So as a thesis, we buy out the time of the driver and maximize his earnings rather than just capture supply or just capture demand and not knowing what to do with it. So as a primary step, we are going to be setting up our ROCs, Routematic Operations and Command Centers, in large cities. We are starting with the 5 cities. We are already present in 3 cities already. So the ROCs will help us in managing the transportation across corporates through centralized command centers in every city that are both demand planning and supply matching at the same time. These are going to be state-of-the-art outfits that we are going to build. What we already have, we are going to spruce up. And like I said, the experience for our corporate clients who are always very demanding is going to get even better, with at the same time maniacal focus on improving the outcomes for the driver.
Sure, but you've got 300 plus corporate clients and millions of trips each month. How is your AI-powered SaaS platform transforming the employee commute experience? What kind of operational efficiencies and, of course, cost savings are you delivering to your clients? If you could throw some light on that.
So corporates are always looking for 3 things. Point number 1 is compliance at 100%, right? Any compromise on compliance, be it on the driver side or the car side or the law of the land, is to be no compromise at all. So we deliver 100% on the compliance factors, and it is all tech driven. Point number 2, they are looking for metrics in terms of on-time arrivals and departures, right? We promise and sign off on 95% on-time arrivals and 100% departures, right? Arrivals help the corporate, timely departures will help the employees and having higher level of satisfaction that they are not sitting around in the car. The third thing being cost, right? This is the pecking order that corporates are looking at. This is exactly what we are going to be doing.
Okay. Sriram, you've also set an ambitious target of scaling your fleet to 10,000 vehicles by 2026. How do you plan to manage this kind of growth, and what role will your city-level command centers play in this expansion?
Very good question. So what Routematic has been doing from beginning, from 2013, it's a 12-year-old outfit now, is that we have captured a large volume of demand to the extent that we already are operating with about nearly 70,000 fleet on the platform, right, in the planning space. And so it is not such a long shot to actually look at acquiring a 10,000 fleet scenario. We are at nearly 3,000 right now, 2,500, 3,000 right
Okay.
now. Yeah, so we are going to be capturing them. And given that corporate transport has a certain pattern to it, it is much easier for a corporate player having aggregated city level demand from corporates. And now we are also looking to other B2B segments like airport transfers and so on to maximize the utilization of our given a time. So it is not such a big deal for us to actually get to 10,000 because, like I said, the platform has already shown capability of handling nearly 70,000.
All right, one final question before I let you go. India's employee transportation market is projected to hit $13.2 billion by 2030. What are the biggest opportunities you see for Routematic in this growing space?
So while employee transport is one large segment, like you said, it's nearly $14 billion. We have much bigger ambitions of actually coming up with an entire DRT platform. What I mean by that is demand responsive transit, where you design for projected demand and design supply for it, rather than the current state of the art, which is design supply, float supply, and expect people to be taking those cars, right? So we are looking at not just employee transportation, but that will definitely set a very huge base for us to play with in terms of improving our utilization. But we have much bigger dream of coming up with an entire demand responsive transit DRT platform, which is actually expected to be over $2 billion by 2030.
All right, and we wish you the very best for that. Many thanks, Sriram, for joining us on Startup Street. Appreciate your time.
Thanks, appreciate it. Thank you. Yeah.
All right, moving on.